Welcome to our exploration of international finance and economics. In today's interconnected world, the movement of money, goods, and services across borders shapes economies and impacts daily life everywhere. International finance examines how countries interact financially, from trade to investments, and how global economic policies influence growth and stability. This video will guide you through the essentials, starting with the basics and gradually diving into more complex topics, ensuring you gain a comprehensive understanding of how international finance and economics work together to drive the world economy. International economics is the study of how countries engage in economic activities with one another. It covers topics like trade, investment, and currency exchange. By understanding international economics, we can see how nations benefit from cooperation, how resources are allocated globally, and how economic policies affect both domestic and foreign markets. This field helps explain why countries import and export goods, how they manage trade relationships, and the impact of global economic events on local economies. Trade is at the heart of international economics. Countries exchange goods and services to access resources they lack and to sell what they produce efficiently. This exchange boosts economic growth, creates jobs, and allows consumers to enjoy a wider variety of products. However, trade also brings challenges, such as competition for local industries and the need for fair regulation. Understanding the role of trade helps us appreciate the balance between opportunity and risk in the global marketplace. Currency exchange is a key aspect of international finance. When businesses or travelers move money across borders, they must convert one currency into another. Exchange rates, which fluctuate daily, determine how much one currency is worth compared to another. These rates are influenced by factors like interest rates, inflation, and economic stability. Understanding currency exchange is crucial for international trade, investment, and travel, as it affects prices and profits globally. Foreign direct investment, or FDI, occurs when a company or individual invests in a business located in another country. FDI can take many forms, such as building factories, acquiring companies, or establishing joint ventures. This investment brings capital, technology, and jobs to the host country, while offering investors access to new markets and resources. However, FDI also raises questions about control, profit distribution, and economic influence, making it a complex but vital part of international finance. Balance of payments is a record of all economic transactions between a country and the rest of the world. It includes exports, imports, investments, and financial transfers. A positive balance means a country exports more than it imports, while a negative balance indicates the opposite. Monitoring the balance of payments helps governments understand their economic position, set policies, and respond to global financial trends. Countries use different systems to manage their exchange rates. Some let their currency float freely, while others fix it to another currency or a basket of currencies. Floating rates change based on market forces, while fixed rates are maintained by government intervention. Each system has advantages and challenges, affecting trade competitiveness, inflation, and economic stability. Understanding these systems is essential for grasping how international finance operates. International Monetary Fund, or IMF, is a global organization that supports economic stability. It provides financial assistance, policy advice, and technical help to countries facing economic challenges. The IMF also monitors global economic trends and encourages cooperation among nations. By offering loans and guidance, the IMF helps countries manage crises, stabilize their economies, and promote sustainable growth. The World Bank is another key player in international finance. It focuses on reducing poverty and supporting development by providing loans and grants to countries in need. The World Bank funds projects in infrastructure, education, health, and more, aiming to improve living standards and promote economic growth. Its work complements the IMF, together forming a foundation for global economic stability and progress. Globalization has transformed international finance and economics. By connecting markets and people worldwide, it has increased trade, investment, and information flow. While globalization offers opportunities for growth and innovation, it also brings challenges like inequality and economic vulnerability. Understanding globalization helps us see how interconnected our economies are and why international cooperation is more important than ever. Trade agreements are treaties between countries that set the rules for exchanging goods and services. These agreements can lower tariffs, remove barriers, and create fair competition. Examples include NAFTA and the European Union. Trade agreements help countries access new markets, protect industries, and resolve disputes, making them essential tools in international economics. Tariffs are taxes on imported goods, while quotas limit the amount of a product that can be imported. Governments use these tools to protect local industries, control trade balances, and influence economic policy. However, tariffs and quotas can also lead to trade disputes and higher prices for consumers. Understanding these concepts is key to grasping the complexities of international trade. Emerging markets are countries experiencing rapid economic growth and industrialization. These nations attract foreign investment due to their potential for high returns. However, investing in emerging markets also carries risks, such as political instability and currency fluctuations. Understanding emerging markets helps investors and policymakers navigate opportunities and challenges in the global economy. Organizations like the World Trade Organization (WTO) oversee global trade rules and resolve disputes. These institutions promote fair competition, transparency, and cooperation among nations. By setting standards and monitoring compliance, trade organizations help maintain a stable and predictable trading environment, benefiting both developed and developing countries. Currency unions like the Eurozone involve multiple countries adopting a shared currency. The euro simplifies trade and travel within Europe, but also requires coordination of economic policies. Currency unions can boost economic integration but may limit individual countries' ability to respond to local challenges. Understanding how these unions work reveals the benefits and trade-offs of deeper economic cooperation. International financial markets connect investors, companies, and governments worldwide. These markets include stocks, bonds, and foreign exchange. They allow capital to flow where it's needed most, supporting growth and innovation. However, they can also spread financial shocks quickly, making regulation and transparency essential for stability. Sovereign debt refers to money borrowed by governments from domestic or international lenders. Managing this debt is crucial for economic stability. High levels of debt can lead to financial crises, while responsible borrowing supports development. Understanding sovereign debt helps explain why countries sometimes face economic challenges and how they work to overcome them. Exchange rate risk arises when the value of a currency changes, affecting international transactions. Businesses and investors use hedging strategies to manage this risk, such as forward contracts or options. Understanding exchange rate risk is vital for anyone involved in cross-border trade or investment, as it can impact profits and costs significantly. International economic policy involves decisions by governments and organizations to influence global economic activity. Policies may address trade, investment, currency, and development. Effective policies promote stability, growth, and cooperation, while poor decisions can lead to conflict or crisis. Understanding policy choices helps explain global economic trends and their impact on everyday life. Technology has revolutionized international finance and economics. Digital platforms, online banking, and instant communication make it easier to trade, invest, and transfer money globally. Technology also brings new challenges, such as cybersecurity risks and the need for updated regulations. Staying informed about technological advances is essential for success in the modern global economy. Financial crises, such as the 2008 global recession, highlight the risks in international finance. These events can start in one country and quickly spread, affecting economies worldwide. Causes include excessive debt, poor regulation, or sudden market changes. Learning from past crises helps policymakers and investors build more resilient financial systems for the future. Sustainable development means balancing economic growth with environmental protection and social well-being. International finance supports sustainability through green investments, responsible lending, and global cooperation. By focusing on long-term goals, countries can build economies that benefit people and the planet. Digital economy is reshaping international finance and economics. E-commerce, digital currencies, and online services connect buyers and sellers worldwide. These innovations increase efficiency, reduce costs, and create new opportunities. However, they also require updated regulations and raise questions about privacy and security. International taxation deals with how countries tax cross-border income and profits. Multinational companies often operate in multiple countries, making tax rules complex. Efforts to coordinate tax policies aim to prevent tax evasion and ensure fair contributions. Understanding international taxation is important for businesses and governments alike. Global supply chains link producers and consumers across countries. Companies source materials, manufacture products, and distribute goods worldwide. Supply chains increase efficiency but can be disrupted by events like natural disasters or political tensions. Understanding supply chains helps explain how products reach us and why global cooperation is essential. International labor markets involve the movement of workers across borders. Migration, outsourcing, and remote work shape labor supply and demand globally. These trends create opportunities for workers and employers, but also raise questions about wages, rights, and economic impact. Understanding labor markets is key to grasping the human side of international economics. Foreign aid involves financial or technical assistance from one country to another, often to support development or respond to crises. Aid can fund health, education, infrastructure, and disaster relief. While aid helps address urgent needs, it also raises debates about effectiveness and long-term impact. Understanding foreign aid is essential for evaluating global development efforts. Economic sanctions are restrictions imposed by one country on another to influence behavior. Sanctions can target trade, finance, or individuals, aiming to change policies or punish actions. While sanctions can be effective, they may also hurt ordinary people and disrupt global markets. Understanding sanctions helps explain international conflicts and diplomacy. The future of international finance will be shaped by technology, policy, and global cooperation. Digital currencies, sustainable investments, and new trade agreements are just a few trends to watch. As the world becomes more connected, adapting to change and managing risks will be essential for economic success. Summary: international finance and economics are vital for understanding how our world works. From trade and investment to policy and technology, these fields shape our daily lives and future opportunities. By staying informed and engaged, we can better navigate the challenges and benefits of a global economy. Thank you for joining this journey through the world of international finance and economics.